And our next story is a heartwarming one from HousingWire.com. A suspected fraudster nearly brought financial ruin to an elderly resident of London, Ontario in Canada, but an area reverse mortgage professional's quick thinking is credited with leading to the suspect's arrest. That according to a news release from the London Police Service. Now, stemming from a suspected fraudulent activity which began in the summer of 2021, 28-year-old Austin Ashelon was arrested earlier this month for suspected fraud. Investigators learned an elderly victim was approached by a door-to-door salesperson and signed contracts to have various products installed inside his residence in the west end of the city, said the police service. The items, including attic insulation, a water filter, and water softener, were sold through a signed contract to which the victim agreed to pay monthly bills for a lengthy period of time. Now, following that installation, liens were taken out against the home, known as notices of security interest in Canada, but without the homeowner's knowledge or permission. The suspect then returned to the home months later. And when he advised the homeowner or the victim that he could assist with dealing with the aforementioned contracts and debts that were owed, the police said. Now, the suspect provided advice in relation to how the victim could actually acquire a private mortgage to help pay for the previous home renovations that were outstanding. The suspect filled out a mortgage application which was signed by the victim, and that resulted in the issuance of a high-interest private mortgage in the name of the homeowner. Now, the scam allegedly even continued further, with the suspect reportedly convincing that homeowner that additional renovations, in fact, were needed. Now, the police say it was believed that the total amounts that were paid exceeded the actual cost of the work that was completed. Shortly after the payment was made relating to the renovations, the suspect convinced the victim to apply for a reverse mortgage to pay back the private loan that was originally taken out, according to the police. The reverse mortgage salesperson became concerned and then contacted the London Police Service to investigate, and that tip ultimately led to his arrest. Investigators determined the man was also being sought for a similar mortgage-related scheme in Cambridge, Ontario, and then they proceeded to charge Ashelon with 2 counts each of fraud over $5,000 and fraud under $5,000. Atchison was arrested in early February and is scheduled for a court appearance on March 11th. Other victims may have been impacted as well, said police. Investigators believe that the accused may have approached others in a similar manner and that there may be other victims, according to the statement. The column notes that seniors are typically targets of bad actors, something that is often highlighted by the U.S. government, including HUD, the Federal Housing Administration, and of course, the CFPB, or the Consumer Financial Protection Bureau. The CFPB maintains a dedicated office to examine instances of elder financial abuse. And there are some big changes underway at Fairway Independent Mortgage's reverse mortgage division. HousingWire reports that Fairway released last Tuesday a series of reverse mortgage maneuvers that they say are designed to increase the company's investment in the reverse mortgage space. And the first initiative is the decision of Fairway to rejoin the National Reverse Mortgage Lenders Association. Fairway left NORMLA at the end of 2021 under previous reverse mortgage leadership. Fairway is renewing its membership with NORMLA, a move that symbolizes its dedication to staying at the forefront of reverse mortgage best practices and regulatory standards, said the statement. Now, at that time when they left NORMLA, they had engaged heavily with the Mortgage Bankers Association. The division's leadership team also has a new change. Dan Ventura, who has served at Fairway since 2007 and last year was appointed as Vice President of Reverse Mortgage Operations. Ventura's new position is as President of Reverse Mortgage Lending, where he succeeds former Reverse Mortgage Lending President Tane Cabe. Ventura, a seasoned veteran in the mortgage industry and within Fairway, is tasked with steering the reverse mortgage division towards unprecedented growth and operational excellence, said the company in its statement. In addition to those changes, Fairway is taking a strategic look at expanding their business in the home equity conversion mortgage for purchase, or HECM for purchase arena, a severely underutilized variation of the traditional FHA-insured home equity conversion mortgage. Recent policy changes by FHA make the HECM for purchase business much more attractive for lenders and borrowers, including the addition of a seller credit announced last October at the same time the Reverse Mortgage Industry Conference was taking place in Nashville. These strategic strategic investments reflect our deep commitment to the future of our reverse mortgage business, says Steve Jacobson, CEO of Fairway. So that's a wrap of the most recent changes, courtesy of HousingWire.com at Fairway Independent Mortgage's reverse mortgage division. And if you have news or your lender, we will be more than happy to report those here at HECMWorld. Just send us an email to info@HECMWorld.com. And in our last segment, we bring you the monthly installment of Reverse Market Insights Market Minute with John McCue. And John, thanks again for coming back. What do you have for us this month?
Thanks, Shan, for having me back again. So last month we talked about what happened in 2023 and how the year ended up. Spoke about some other opportunities that we could think about from a heck of a purchase perspective. So this month I wanted to speak to how 2024 started and how it's going so far, looking at January. As you can see here, endorsements actually dropped 1.7% from December's numbers to 2,153. When we start looking at the 10 different regions, you can actually see in the top five regions here, only one of them, the Northwest Alaska Territory, grew up to 184 loans from 170 the month prior. New England also gained 13.6% to 117 loans. The Mid-Atlantic region rose 12.3% up to 137. And then the New York, New Jersey region increased 10.5% to 105 loans. So, the bottom half of the regions actually saw some significant growth, while the top half mostly saw declines. Moving our attention to the lenders, kind of same thing. Out of the top 10 lenders for the month, half of them went up, half of them went down. Um, so just looking at a couple of a handful of them, though, if we look at the Good Life slash TMAC, they're up 27%. Fairway was also up almost 20% to 19.1%, while FAR bounced back to 17.7%. So we definitely saw some decent jumps here, but it was definitely a mixed bag as far as the lenders were concerned in January. And finally, we always talk about this every month. Last month we didn't have case number assignments. HUD was running behind, but we do have the most updated ones now, which is up through November. Unfortunately, the numbers aren't great, but keep in mind that October was the peak of the recent 10-year CMT rates before rates started to drop in November. So that probably accounts for some of these decreases that we saw. So in November, case numbers actually dropped 22% to 2,623 total applications received. But it doesn't really get much better from there either. New equity takeout declined nearly just over 21% to 21.1%, down to 2,311 total case numbers. And purchase had another significant decrease at 22.5%. But the one number here that really is probably very concerning, and we've been speaking about this for months now, is the HECM refinance number. This 181 number is the lowest number I could find over the last 3+ years. This is proof that refinances are dead. We have to concentrate on the new equity takeout, which is going to be a challenge given the current rate environments that we're in, but not completely undoable. But purchase is certainly where we can make up some of that ground. The good thing is we see some of these recent articles from Chris Clow and Housing Wire, some of the anecdotal things that loan officers are saying out there. So it sounds positive. It sounds like things are turning around. The interest is there from prospective borrowers. We just have to kind of keep our head down and keep going at this thing. But definitely refinances, HECM refinances, these things are dead. We have to put our attention into other places. So with that is our January update. We will talk to you next month.
And that concludes this episode of HECMWorld Weekly. Just a reminder, we do have an audio edition. If you cannot watch, you can also listen. You can find us on Apple Music and Spotify and Podbean, and also at HECMWorld.com. Thanks so much for joining us, and be sure to return next week for more reverse mortgage news and commentary for the mortgage professional. Have a great week.